Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Thursday, October the 1st. Well, an extremely bearish day today, and we can see that the size of the body is very much larger than the body of the candles anywhere in the recent past. This reflects the extreme volatility in this market, and it's telling us that the sellers have made some very, very strong bearish net gain on the day from open to close. It's also a black Maribozu candle, which is the most bearish type of candle that we can have, where the market opens at the high and closes at the low. And that's telling us that the bears are keen. The bears have had control of the market when the market closed. And, excuse me, that they're showing some very strong commitment to taking this market lower. Now, just looking at this area around here, there was previous downside price rejection coming in as the market traded up to that area. So we might expect that we could find some support roughly in this region. The market has closed roughly around this area. There is potential for the market to retrace from there. And quite often what happens when a market is at extremes, as it has been today, it tends to relax a little bit. Doesn't mean that the trend will end, but we really have had quite an extreme day when we look at the size of the body of the candle compared to many of those around it. Although the trend of the market is down, we have a lower high and a lower low, continuation of that first time frame downtrend that we identified yesterday, and the market took out that 1044 level very, very solidly. So because the trend is down, we should expect that the market will continue trending down on its way. The next level of support, failing that, is this previous resistance area at 1018, where the market could find support, and then the Kumo comes into play around the 1000 level. Round number should be very strong support for this market, and the cloud should be very strong support for the market. The market is trading up above the cloud or the Kumo, but trading down below the Tenkan-sen and the Kijun-sen, which means that the market, because it's trading up above the cloud, means that the market is positive, but trading below the Tenkan-sen and the Kijun-sen means that there is a bearish element to the market as well. So we're getting conflicting signals. So in the fast to medium time frames, the market is quite bearish at the moment. The Kijun-sen had turned flat previously, and as quite often happens, the flat Kijun-sen tends to be an attractor of price action. The flat Kijun-sen reflects equilibrium in the market, and this is the market moving back to equilibrium. The equilibrium area is denoted by the Kijun-sen, and that's gone flat, and price action tends to attract back towards there, and that's what's happened here. It's actually failed to hold as support too. Quite often it can hold as support or resistance, and has failed to do so there. The Tenkan-sen is pointing down fairly sharply, reflecting the high volatility in the market today, and reflecting the very strong downside momentum that the market had. Now, the market has also, importantly, entered a second time frame downtrend, and this market hasn't been in a second time frame downtrend for quite some time. Previously here, it was in a second time frame downtrend briefly, and then the bulls took over and began a first time frame downtrend. But now we have a peak, a trough, a lower peak, and a lower trough as we took out this trough. So it's looking most probable that the market will test this 1000 area or the area around the cloud because of that. Quite a strong indication that the market will head lower, with the market moving into a second time frame downtrend. Whether it retraces it substantially, any of this very large upswing the market's been in remains to be seen. There's probably too much support all the way down through here for the market to hold up down much lower than the 1000 level.